Well, I struggled to find a bearish setup this week, and I have not found one, unfortunately. So it seems like, for now, it just seems like everything looks like it wants to rip to the upside. Did I pick the right chart? This looks like a Heikin-Ashi chart. This is not the right chart. One second. So I could not find a bearish setup. The only bearish setup that I actually see in the market is an inverse bearish setup. It's a TLT chart. Usually when TLT goes up, the market goes down. And so it's a bullish setup on TLT where it's sitting underneath all its moving averages, but it's targeting some of these, it can easily pop above all this consolidation here and move upward. So that's really and we have the MACD and the RSI all pointing kind of to the upside, right? So that's really what I have in terms of a bearish setup. I really couldn't find one. I spent a long time looking through my master watch list. There might be some names out there that potentially, have a better setup to the downside. But yeah, I didn't see anything. And if you have anything and you want to share it, by all means, please do. So let's get started. So let's look at SPX. Just start with SPX because I like to start there to kind of know what direction everything is going in. Let's see. Okay. So all right. So SPX bounced right off of the and this is the daily chart. So SPX bounced right off of the 200 moving average, and really that's what I was waiting for. I was waiting for it to kind of come down to that moving average and see what it's going to do. Now, off this moving average, it can make a strong move to the downside or strong move to the upside. And for now, it looks like it wants to move to the upside, right? So all we can do really is just not really try to predict the direction, but more so just kind of let it kind of make its direction. I think I'm connected in two different places. Kind of let it make its direction, and we move accordingly, right? We plan for both setups, upside and downside, and whatever ends up coming to fruition is what we want to take, right? So again, right now I can only see bullish setups in the market, so I'm going to just plan for the bull case. If this thing pulls back, I just don't have a plan for it right now, unfortunately. So looking at it, just bouncing off the 200-day moving average, up above the 50, opened above the 50, didn't even come close to it, right? Opened up, came down just a little tiny bit, but not close to anywhere near the 50. And now it's targeting the 20-day, which it hasn't come in contact with the 20-day since the close of February 16th. And prior to that, I would say this day here on January 6th. So it may or may not be a factor depending on how the market feels, how bullish it is or how bearish it is, right? So it may not be a factor. We might just cut right through it. If you looked at a lot of the charts, like I think Tesla was one of them. There was a couple of things I was looking at on Friday that all kind of hesitated around the 20 days. So it comes into, sometimes you'll find that the 20-day plays a very important role. But I don't think for SPX is going to be a really big deal, but we'll see. So I'll be watching that as a kind of a key level. I want to see this 40, 45 clear, right? The top of this candlestick clear. And then from there, the next target will be the top of the previous day's candlestick at 40.82. Above 40.82, we can very, very easily see 4100. So if we get a nice bullish couple of days, I would set that 4100 as kind of your first target for the week. And, don't stay in the play. Don't get greedy. Anyone who plays SPX, typically you're playing for the same day expiration. So, you're either in or you're out at that point, right? Like unless you're swinging. And if you're swinging, then, if you are swinging, right now the setup looks good to continue to the upside, but I would wait to see what that 20-day moving average does first. If you are swinging, I would peel off at 4,100. And me, I am not swinging. I am not swinging SPX. I do not like to swing this. I don't like roller coaster rides without seatbelts on. So that's just me. So SPX looks beautiful to the upside. Let's see. And again, I couldn't find any bearish setups in the market. Everybody was extremely bearish as of last week. Excuse me, and rightfully so, because at this time last week, we were underneath the 50-day moving average. So, under the 50 is a big signal to continue to go down. But the way that everything lined up underneath the 50-day moving average. We caught support at the 200-day. The 100-day, which is a white line down here, is curling up, and then we have the MACD curling. It already did its full cycle on the bearish side. Now it's looking to cross the zero lines to turn to some green candlesticks on this side. RSI is pointing straight up with plenty of room to the upside. Usually 70 is like where it starts to get hot, and the TTM is losing bearish momentum, which means it's headed back to zero, which means everything looks like it's going to go up, right? Now, again, things can turn around in an instant. I mean, just because it looks a certain way now doesn't mean that's how it's going to play out. So as I always say, just kind of, play it very lightly. Don't get too biased. I know like a lot of people in the market are biased, very bullish right now. And I am too, I'm not going to lie, but, just make sure that, that you keep that euphoria on a little bit of a leash, right? Don't let it get out of control, because then all of a sudden the 20-day comes into play and it smacks us all the way back down to back to the 50-day or something, right? So, so just be aware of that. The first ticker that I have here that I want to look at is Coinbase. Coinbase to me looks very interesting because of this wedge that's forming on a daily. Let's look at the history of Coinbase real quick. Let's look at the weekly chart. If we look at the weekly chart, obviously it opened up way up here at 381 at its IPO, and it's been pretty much falling ever since. It's never been in an uptrend. It's always been in a downtrend. I think now is like the first, maybe the beginning of kind of a reversal, right? Because we had this kind of up, down, and then this is still like a lower high compared to this, right? So all said and done, we're still in a lower high, but we look like we're potentially turning around. So it's very interesting where it is right now. And we have this massive consolidation. I mean, it's not like the tightest consolidation, but we have been playing this range for quite some time. All right. This range here. And so it's just been up and down in this range. And with this tightening going on here, there's going to be a big move coming out of it. Now, again, I don't know. The reason why this is marked blue on my watch list now is because I'm not sure what direction it's going to go in. One thing that I do like is that we're currently sitting above the 200-day. We're above the 100-day. We're above the 50. We're just above the 20-day, right? We are 40 cents above the 20-day. So we're above pretty much all of the moving averages. And if we can hold this spot right here and try to take the top of this range out, this falling resistance line down, then we can potentially come out to hit the 67.50, then 69.50, and then 74, right? 74 is my ultimate target if we do get the breakout. I want to see candlesticks like this February 15th candle or this February 2nd candle. Right, that's what I'm looking for out of this breakout, because you have a nice range contraction, right? This big candlestick here has all the range moving forward. Even though we've come and broken down below it on these 2 days, and even broken above it on this day, it's still holding the majority of all the price action within this one candlestick. So above this 69.50 is going to be a massive move, in my opinion, if the bulls are in control. Otherwise, we're going to see bears bring it right back down into the support line. So I think it's just at a key area. I don't have quite a setup for you yet, just because it's, we don't know. Like, this can easily, you see how seller stepped in at the end of this. This could easily fall down and go sideways for the next couple of days. So, for now, I would just kind of sit on it. I'm gonna set my alert at the break of the day high. That's 65.58. Okay, that's good. The day high was 65.56, but I'm gonna set it at 65.58. Which will indicate a break of day high, and then we'll see. We'll go from there. The next one that I have that I'm kind of iffy on is Macy's. Now, the only reason that I'm a little iffy on this is just because, I mean, they had a really good earnings a couple of days ago, a beat on both sides, earnings and revenue, and it was nice. It was a nice beat, especially on a technical setup coming out of this 200-day. Moving average, right? We kind of opened underneath it, tested some support below it, and then bounced up above it. Seller stepped in, and then it gapped on Thursday. We got a bullish MACD cross, right? We got a nice flat RSI, which, I mean, is not the best. I'd rather it be pointing up, but it's nice and flat, so I'm not complaining there. And then we got this TTM, which is curling to the upside, going back to zero. So all things pointing, all my momentum indicators down here, these three indicators are showing that there's more potential for an upside move. Now, the reason why I'm this even is on my radar right now, I mean, we haven't traded this in a long time. The reason I haven't really been in love with it is because it's been within this massive range here, from around $25 down to $20, which is nice. You can catch some nice moves, but that's a $5 range, and this thing moves like maybe $1 a day, maybe 50 cents a day, right? And on some of these days, you're not getting a lot of moving, you're getting a lot of chop more than anything else. So that's the reason why. But I do like the catalyst of a positive earnings, moving this up, bouncing it off the 200 day, right? Taking it off the 200 day, and then we see that the next day, Friday, we formed a smaller bar. Which looks like an inside bar on a 3-bar play, right? I mean, there was some sell pressure that occurred here, which brought this price back down, but it didn't incomplete the 50% of this move. We're above previous resistance over here on the resistance levels of February 15, 16, 17. And if they were super bearish here, they should have been extremely bearish here and brought it back down to the 50, but sellers weren't able to maintain control on Friday. So what I want to see is I want to see this break above the range of the day high of Friday, and I'm just going to watch it, right? But above Friday is going to be interesting. Above Thursday is when we will take action, right? I'm going to set my alert to here so I can just start to watch it right there, add alert. We need it to break above Friday before it can get interesting, and then above Thursday is where we take action. Above Thursday's high, we can target the high of this day, which is 23.70. So that'll give us like a nice 60-cent move. Nothing crazy, but I think it'll get us in the right direction. Especially if it does it tomorrow, it might give us multiple days. It might give us a 2-day move to the upside based on this earnings catalyst, right? This earnings drift, they call it, where a stock moves and it breaks out in the direction for earnings and then continues to move in that direction for a few days or weeks or months. So if we do get the 3-bar play, then I'm looking for 23.70. Above that, I'm looking for 24. And above that, I'm looking for 25. Very simple. But again, it's in blue because I'm not quite sure. It's not like a fully identified setup. The Knicks are going into double overtime right now. All right, so let's look at let's do XLU last because I didn't too much, and it didn't make it to the screenshot that I posted. Let's look at it last. Let's see. First one is NVIDIA. NVIDIA is such a beautiful setup. Let's look at this on a 30-minute. NVIDIA is such a beautiful setup. Now, the reason why I like, and I think I had it on was it a 2-hour? Yes, the 2-hour. Okay, so I had it on my 2-hour. You can see the daily moving averages here. The white ones again, the 100. The black one's a 200. The 50 is a red. 50 red is a 50, and the 20 is the blue is a 20. And what we have here is we have a bullish cross of not only the 20 and the 100 and the 50 and the 20 and the 200 and the 50 and the 200, but the 20 through the 50, right? We have the 100 over here crossing through the 200, and the 200 is forming new highs, right? The 200, if you see right here, this line at 160, all the way to the left of the screen, the black line is coming down towards it. It flattens out on this line. Now it's pointing up. So all the moving averages are pointing up, especially that 200-day moving average. Let's look at the weekly real quick. On the weekly, I mean, it's just been a monster of a year so far for NVIDIA, right? And the biggest struggle was during this week, the week of the 13th, Valentine's Day week. We had an inside bar on a red hammer with a lot of sell pressure from the previous 2 weeks. And then the week right after that, buyers took immediate control and just ran it up, right? And then the week after that, which is this last week, you see that we kind of tested the middle of the range, but then bounced back up and buyers stepped in and brought it right back up. So a lot of buyers like it, and so do I. Let's do 2-hour. And to me, I mean, this is just such a beautiful setup on a 2-hour. It came down to this 20-day moving average. It consolidated underneath it, and then at the end of underneath it, and then at the end of the day after market close with positive earnings and positive earnings per share and revenue growth, we had a nice move to the upside. And then we found resistance at that open, and we kind of went sideways, right? Fell hard, came back up to test the range again. Came back up to test the range again the next day. It looks like a little bit of supply sitting in that level right there. You see where my little box is, and it fell pretty hard from there. Came down, found support on previous resistance over here, and just is slowly climbing the steps right back up. Now, I'm looking for, this is a very clear, I would call it a quadruple tap, right? You got this one tap here, you got a tap here, you got another tap here, and then the final one, right? Let's call it the final one. I mean, this can easily fail and come right back down to the 20-day. But based on what I'm seeing, I think that, especially if you just zoom into this, it looks like another 3-bar play forming on NVIDIA, right? Another 3-bar play, big, massive engulfing bar. This bar here broke above all these highs. And then seller stepped in a little bit, and now we got some consolidation. So I'm looking for this to open, hold this current area. You know what? If it fails, I'll even let it fail. I'll even let it fail this area over here at 237.84 and come down to 237.24, right? And if it holds 237, then I think that we can get a nice breakout to the upside to target 240 and 250 very, very easily. So NVIDIA is the number one candidate for me this week. Let's look at the daily real quick. Let's look at the daily. And that's what I wanted to see. I mean, I know, so we have a few things. We have a hot RSI. RSI is currently at 64.31. So we have 6 points to the upside before that signals that it's extremely hot. We have a TTM, which is picking up bullish steam once more. And then we have a MACD that's it's consolidated, but it's about to flip to the upside. Now, this isn't the cleanest MACD. I like MACDs when both the histogram and the lines are underneath the zero line and they can both work their way up. This has just been consolidated for so long and kind of choppy, especially in this area here, that it's kind of messed the MACD up a little bit. But still, it looks like we're going to get positivity coming out of this. I mean, we have the lines up here, but, and I'd prefer the lines to be down here and going up and this ready to go up. But it is what it is. A nice supportive MACD. The one thing that I see is that they have dividend payout on Tuesday. So that might be a catalyst for a slow day. The last dividend payout, they formed a doji. Prior to that, it was another doji over here. So we might get the same thing on Tuesday, but I think we can get a breakout tomorrow. And with that breakout, again, 240 and 250, very, very simply. What's the close of this? 239. So 240 is like in the bag pretty much. As long as like it opens green, goes green, first few minutes, we can get 240 very, very easily. You can smash those 240s at the open, scalp them, probably get 100% on it. And then if it bases and shows like some sort of bullish setup intraday, 15 minutes, right? Then at that point, you can smash the 250s. So be on the lookout for me calling out the 250s and maybe even the 260s for NVIDIA. Very, very clean setup in my opinion. The next one is LRCX. LRCX is one of the most difficult tickers I've ever traded because it's not as predictable as some of these other ones, and it doesn't respect technicals as some of these other ones. Going back to that 15-minute chart, some of these, like, look at this day, February 28th. Look at how much gaps there were between the price. Like, this thing trades with not that much volume, right? So it's kind of like Lulu, kind of like AVGO, kind of like Booking, right? Kind of like Melly. Shop was like this for a while. Shop has a lot more volume now. But it's just tough to trade because sometimes like price will just erratically move. You get buyers up here, sellers down here, and it just kind of forms gaps. So it's kind of difficult, but it made a nice move on Friday. Now you can see that we've been trading above the 50-day for quite some time now, right? We moved up. Let's go back to the daily real quick. We spiked up above this 50-day ever since we crossed it on this day, on the 6th of January. Massive move up, and now we just had to pull back to it. I mean, we really just had to pull back to it, right? I mean, it's the only right thing to do. It's healthy to do that. You don't want to be too extended from these moving averages because, the market doesn't like that. So we pulled back to it. We consolidated right above it. We got our first taste of it on Thursday, and on Thursday it made this nice gappy move up. Let's go back to let's go to the 1 hour. Nice gappy move up on Thursday, and it's been above that 50-day the entire time. We kind of did a double bottom on the 50-day, right? I mean, this didn't touch it, but it's like right there, right? And then we have this one. The Knicks are up by 5 points. Let's go. Okay, so this level I drew last week. This 492.92 I drew last week, and it's still in play, right? We opened up above it a little bit, consolidated around it, and fell below it, and then gapped down. Now it's back into play as of Friday close. We need to break out above this candlestick here, this line, this candle right here, and then the next target would be this 497. But I mean, at that point, I would just call it 500. To be quite honest with you, above this level. If you're risky, take it above the high of day. If you want to be a little bit safer, you can set your alert, take it above the 497.28 level. Watch out for this 20-day. Again, you can see some reactions on the 20-day over here where it found support on it, found support on it, found support on it, right? Cut through it like butter here. So it might find resistance on it, resistance on it, resistance on it, cut through it like butter. Let's see. Or it might just cut through and ignore it completely, right? But it depends. Another thing I see is not only is the 50-day acting as support, but we also have kind of a higher lows setting up here. So very nice setup in my opinion. Let's go back to the daily. We got this, the MACD is about to flip first is going to go to zero, right? Tomorrow, it'll likely go to zero. The next day, it'll likely form a green histogram candle. The next day, it'll likely push upward based on what it's looking like now, right? Just based on what I'm seeing now. Again, that's with a supportive market. That's with a green SPX. That's with a green NASDAQ. That's with or rather QQQ. That's with a green, that's with a red energy sector. That's with a potentially red financials. And that's with a TLT falling, right? There's a lot that goes on that will cause this to move up. Actually, before I continue, I just want to take a look and see. There's a couple of names that are reporting this week. So let me just finish my analysis here. We got the MACD curling up. We got the RSI in a good position and going in either direction. And we have the TTM about to lose bearish momentum back to zero. Everything shows that it's going to go up. Done. Analysis done, right? Now, I want to see if there's any companies that are reporting this week that will affect LRCX. Before open, we have Lordstown is one of the only ones that I'm familiar with. After close, we have Trip.com, we have BBVA, we have Weight Watchers. Before open Tuesday, we have Dix, we have Squarespace, that's about it. After close, we have CrowdStrike, which is usually a big one. We have Stitch Fix, which is always interesting to play. Before open on Wednesday, we have Nine is an interesting company to trade. MDB, MongoDB is reporting after close on Wednesday. We have Asana after close. Thursday before open, we have JD, we have BJ's. BJ's is going to be an interesting one. I would watch it just like we watched Costco, because those are both indicators of kind of where the economy is, right? Those are those wholesale clubs. We have after close, we have Ulta, we have DocuSign, we have BioNano. Wow, haven't heard that in mad long. We have Oracle, which some of our members have posted Oracle swings, so those might be earnings swings. We'll see. And then nothing major on Friday, right? So I don't see much that can potentially affect LRCX. And if I want to reach, I would say maybe DocuSign, maybe CrowdStrike, but even just because they're tech based. But even then, I think it's a big stretch. So not much to be worried about there. PaySafe is another one reporting this week. Let's see. PaySafe reports on, where did I just see it? PaySafe reports Thursday morning before open. That was another fun one to trade. All right, so let's get back into the list. After this, I have JP Morgan. JP Morgan is a very clean setup. Nice consolidation after this big gap up, right? What happened here? This was an earnings day. They went insane on this day. They opened at 135.60 and they closed at 143. So $8 move for a stock that typically moves like $3 maybe. So massive day. This big day set the range. And we did test the lows of it. We've tested the highs of it, and now we're right back to the highs of it, right? So what we want to see is kind of we have kind of a triple tap going on here. We have the 20-day that's sitting right up underneath price. The 50 days rising, the 100 days rising, 200 days, everything's rising. Now I've been looking at this ticker for this breakout for the past like 3 weeks now, and I'm tired of looking at it. I'm gonna be honest with you. I'm extremely tired of looking at it. I need this to break. You see where my alert level is? I have my alert set right here at 144.25. I'm ready for, what is it? 144, what is it? 144.36. I'm ready for this to break so we can get to $150. And then from there, $160. I am not in a rush, but that's what we're waiting for. Nice and simple. I mean, and then above that, we have a little bit of few little volume gaps over here to fill. And then we can really above, like, I would say above this level at 150, 151, we can get up into the 155s pretty easily. So that's what I want. That's what I'm looking for. Again, this is the third time I'm looking at the analysis. It's exactly the same. The only thing now is that maybe MACD might be on our side a little bit. RSI might be on our side a little bit. TTM is nowhere to be found here. Just because it's been consolidating for so long. So breakout above this level, we can get, above 144, we can just call it 150 for the week, right? And you can trade it for 2-3 days, swing it overnight. Depends on what you want to do. What's going on in the news with them real quick? As I glance over at the Knicks score. Okay. SoftBank's arm aims to raise at least $8 billion in US IPO. Okay. More SoftBank. SoftBank, if you're familiar with them, they were behind the WeWork IPO. They were behind a lot of activity actually in the market in 2021 and 2020. And so I would be interested in knowing what's going on there. Bank of America, Citigroup trim investment banking headcount in Asia. Okay, that we knew. That was last week's news. Actually, I think JPM was the first one, then Bank of... Okay, so now there's additional banks that are doing the same thing, following suit, following the steps of JP Morgan. So, again, this might not affect them. Maybe it does. Maybe it's like a catalyst since they're laying off crew. Maybe they're taking numbers off of their balance sheet. More is better for shareholders, right? It might not be better for the markets that they're tending to serve in that area, but better for shareholders. And Credit Suisse raises rates for new deposits. Okay, so again, good for banks. So nothing much going on there. Nothing crazy. Nothing market moving except for maybe the headcount trim, right? Maybe that's something, but I don't know. But again, this is all not valid until we break above that level. You can go ahead and set your alert right to the high of this candlestick here of February 7th. Set your alert and chill, and jump into the 145s, 146s, maybe the 150s. You could buy, these are pretty cheap too, so you can buy a week out on the 146s the 150s if you want. Right, by next week or the week after. Okay, so the next one that I have is, my group chats are going insane right now. Fucking Knicks fans. All right, so the next one that I have is X. We missed X this week. I mean, if you bought it and you traded it, congratulations. If you own stocks or leaps, congratulations. The Knicks win by 2 points. Amazing. All right, cool. So if you own it, congratulations. It made a massive move off this 50-day. Big consolidation in this whole area here. It gapped up, and then a bunch of sellers took over, brought it right back down into support. And then it tried it again. They brought it right back down into support. And then you can see the battle between buyers and sellers on these 3 days here. And then it gapped down, touched the 50, and then hit the bungees and just went vertical, right, for the past week. So X is in an interesting spot because it broke out above yearly high. It made a new high of year on this one candlestick. Excuse me. Let's go to the weekly. So we have a potential pivot machine gun, not in its true essence, but for example, we have 5 back-to-back lower lows on these weeks here. This week, and even the week before that. So if I'm trading and I'm going short, I'm going to set my stop to the high of each of these candles. So the idea is that once you take out some of these highs, the price accelerates to the upside. So that's what I'm looking for here. Now that we've finally broken out above this consolidation, this $33 mark is magnetic, and so is that $34, $38 mark, which is just the high of this weekly candlestick. Go back to the daily. So, the easiest way to find levels is to just look where price has been before. As you can see, if you look at this area right here, shows a little bit of consolidation. So maybe price might reject this area a little bit, or might, if it can firmly plant its way into this middle of this yellow box, it might chop around a little bit just like it did in the past. And as you can see on Friday, price rejected that box just a little bit. So there might be some selling activity sitting in this area here. But above this level, I'm targeting that $33 level, and above that, I want to hit that 34, 38. Very simple. If we can't break out above, if we can't get out of this box and into these levels, then you can see I have a short setup here. And so again, it's a bullish setup, but if it fails, it can give us a nice short. Underneath 3088, which is low of day. We can go down to 3014, which is a previous low of day. Underneath that, we can hit that 20-day moving average, right? So nice downside, especially with risk reward. Very, very nice downside play, because all you have to do is set your stop at the high of day or even the close of day, and then you can just play short, right? Play puts all the way down. And with this, you can go pretty far out. Far out, I would say $2, right? 29 puts or something like that. And swing it for the week if we get that rejection. If not, I mean, I would actually let it sit here and chop a little bit before you decide to go long. But I'll be watching X this week because I like the setup. It's out of this consolidation, which I've been waiting for. So very, very nice. Very excited about it. If you ever trade X, you know that CLF is usually right next to it. CLF is actually looking a little bit more healthy, and one of them is always giving a better setup than the other. This time around, it looks like CLF is ready to give a better setup. Let me just take a quick sip of water. Okay. So now what I see with CLF, I mean, besides the fact that we've broken the range, we made a new yearly high. We got some levels over here that we can easily identify and attack. We're above all the moving averages, right? We're above all these 4 moving averages that I have on my chart. There's a massive cup and handle kind of formed here, right? There's also kind of an inverse head and shoulders kind of vibe, right? But I see the very clear cup and handle. Here's your beginning of your cup, right? Price jumped around a bit, formed this low here, and then kind of rounded up. And then here's your handle, right? This area here from where this hammer is on the 3rd of February down to over here where the higher low is here before it kind of gapped up above the 20-day and up above previous highs. So I like this as the leader. If CLF goes, then X will follow. Even with negative earnings, they even with a loss on both sides, they still managed to make this nice move up. So that's nice, very nice. The MACD is already positive, so it can stay positive and grow. The TTM is very hot. I mean, it's at 71. This TTM, the RSI is at 71. It's been as high as 81. If you look over to the left, it's been as high as 81. So maybe a factor, maybe a non-factor, who knows, right? It depends. And obviously if you come down to the smaller time frames, the 4-hour, 2-hour, the 1 hour, that RSI might be much more cool, right? It depends. And obviously the weekly will be a little bit more cool as well. On the TTM, we got a green candlestick. It's very hard to see because it almost doesn't exist, but a nice little green candlestick peeking its head above there. So we might get all momentum indicators are all showing strength to the upside. So above high of day, which really means if it opens above high of day and it shows some sort of finding support, then it can easily take out this 2321, 2391, 2466, 25. I would swing maybe 25 calls or maybe 23 calls. 25 you could probably play into next week if we continue with the momentum. Again, that's if the market supports it. So it all depends on the market. Again, and I don't like being in a place where I'm stuck. And this market not being able to identify bearish setups this week has me feeling very stuck, very kind of like, oh, I hope that the bulls take over this week. I hope that, because otherwise a lot of us are going to get, not a lot of us, but a lot of people, maybe if I don't see a bullish setup shaking out, I'm not trading anything. I usually, whenever I post my trades, I usually scalp 2 and then hold 1, or scalp 1, hold 1. If I want to go heavy, I usually go heavy for like a weekly swing, but most of the plays that I set up are usually like test the water. We can get maybe one good day out of it. But if this market sets up to the downside, I won't have anything. I'll have nothing. So maybe CVS. I was looking at CVS to the downside. Maybe it'll continue moving to the downside. That's like the one, maybe. But even then, like, look at where the RSI is. RSI on the daily is all the way at 24. Where are we? 27.46. So it's super oversold. Looking at this channel, I can actually probably draw. I think this is a weekly channel that I drew, or maybe a monthly channel, but I can just connect these highs together. and I can connect. I don't know if I can. I don't know if is that a good one. Let's see. Yeah. I mean, yeah. It is. It is. It is a good one. From this wick to this body, and now we have this wick right here, right? So it might be a spot for it to bounce, but if not, this is probably the only bearish setup that I have for us this week. So let's go back to right. So let's go back to the program. SQ is another one of my favorite setups for the week. SQ has been in this channel for months and months and months and months. For almost actually one entire year. An entire year, pretty much. 4 earnings cycles. Here's one, here's one, here's one, here's one. We have one more. So, you know, this one here will make it a full 4. Now I like it because it's sitting above all the moving averages. Right, it wasn't impatient in trying to like break out and move rapidly and make moves like hasty moves like it did back here, and then fall hard. It's just been like, oh, I can't make it out. All right, cool. I'm gonna chill. Try again later. Oh, I can't. I'm gonna try later. Let's just form. In the meantime, let's form this higher low. Try again. Oh, can't do it. All right, let's form this higher low. Right, it's showing patience. So I don't expect it to fully break out, but let's see. We have that low there. We have these lows here. And then we have, and obviously this one of these trend lines is going to get invalidated, can possibly get invalidated pretty quickly, but I just want to illustrate the higher lows, right? Now we're currently sitting above the 20-day, above the 50-day. We actually based around the 50-day for a few days before kind of gapping up and then breaking through this resistance right here. So I think we're in a good spot to test this high, which is we're just 30 cents away. And then above that, we can test 82.70. Above that, we can test 84.29. And then from there, we can go to test some of these, the top range of this channel. So I like it because we have this rising support level here. We have the 50-day right here, and we have the 20-day that might act as support for us in the near future. Look at the 1 hour. So again, nice consolidation on the 50-day. A lot of buyers, even on negative earnings, buyers stepped in, right? And that 20-day was acting as a resistance for us. And SQ was one of the ones I was looking at that had the 20-day interaction on Thursday, Friday. And as you can see on Friday, we kind of bounced off of it and we moved up. So I want to see a continuation. I want to see it pull back a little bit, find support, and then work its way back up and start forming an uptrend. Above 81.33 is probably the trigger, the safest trigger for us, because it will have cleared most of its resistance. 81.30, let's call it 81.34. That's fine because that's what I can target now. And then above that, we can aim to this 82.70. Above 82.70, we can hit 84.30, right? So those are going to be the targets. Maybe play the 83 calls or the 84 calls, or if you think it has more, then maybe play the 85 calls for next week, for the 17th expiration, not the 10th, but the 17th, for SQ. So very nice setup. What did I do? I did the 1 second. I did the 1 second. I don't want a 1 second. I want a 1 day. I want a 1 week. There was something. Where was it? On the daily? Is it this? Oh yeah, it's this. It's this. We have a nice clean MACD curl, a nice clean RSI, and a nice clean TTM curl. So all momentum indicators showing that there's potential upside for SQ. Very simple. Next one is Apple. Apple is a tank. I mean, you know, it did fall pretty hard from its highs. The highs here of January of 2022, where it was at 182. It did fall quite hard from it. It came as low as what is this? Low of 124.17. But we're right back into the kind of the middle of the range, right? On the lower end, but still working our way up. Nice move out of consolidation. Consolidated, found some resistance, fell hard, fell underneath the 200-day, And then from here, it was like, all right, we're either going to go magnetically down to the 100-day or come back up to the 200-day. And what we did was we went back up to the 200-day. We opened up above it. We came down and tested it. And then we gapped and broke above the 20-day and are currently sitting above the 20-day. So a lot of bullish behavior. Let's do the 2 hour. A lot of bullish behavior for Apple. I want to see it staying above this 20-day. I also, if that fails for whatever reason, which I mean, obviously, you know, people are taking profit or whatever the case is, or the market just goes south. If it can maintain support in this area here above previous resistance, then I would love it for like 160 calls for maybe next week, right? 150s for this week are in the money. If it comes down here, maybe we could play the 150s at the, you know, towards the end of the week. And if it holds support here and gets back above that 20-day, I would call for 160s for next week. Excuse me. Another thing that I love is the, you know, right here, this is the low point for the 200-day moving average. If you look to the left, it's coming down towards this line. And if you look just at where my cursor is at, that's when it starts to pick up and lift up off of the 200-day. So if that 200-day starts to turn around, the 200-day lifts up off of this line here. So if that 200-day starts to turn around, then that means that price is all going to turn around and continue to move up. So again, hold that 150 level, hold the 20-day, which might not be crucial, but the 150 for sure is crucial. Then we can continue to move to the upside. I'll be watching it. I'm going to set my alert for this level here, which is above the high of the week, pretty much. I want to see it above that level before we can take action on it. I think this will make a nice short play too. If it breaks the 20-day, it might come back down and retest that 200-day once more. Actually, I can see that playing out because now that I'm looking at it, we have a potential shoulder, head, and then if we reject here, we can come back and form another shoulder on or around the 200-day and then try to break out from there. So that's another potential, right? That would be a nice short setup. If it fails, we can play it back into the 200-day. Once it gets close to the 200, you can sell your profits. If it breaks down below, then it might finally come back and test that 100-day once more, but who knows? But I like Apple. Let's look at the daily one more time real quick. Okay, good. So the daily, that's what I wanted. That's what I was hoping to see. The daily MACD is curling. It's going back to zero. The RSI is at 56.98, a little bit of room left to the upside, and it's pointing almost straight up, right? We have like a 70-degree or 60-degree angle on that line right there. So nice indicator. And then the TTM is losing bearish momentum, so it can go back to zero. Everything is pointing upwards for Apple right now. So I like it for this week. Next one is one that has earnings this week, actually, is DKS. They have earnings on Tuesday before market open. So we have a potential day trade here. DKS is, you know, you look into like the sectors of like, for example, like Lulu, Macy's, Target, and I would venture to say maybe Costco, maybe, you know, and maybe not Costco, more like maybe like the Five Belows and those, you know, those kind of where they sell all kinds of stuff, but they usually find you'll find lots of deals in their clearance section, and they're due to their overstock, due to their mismanagement of inventory, right? So anyway, might be a good indicator for them, for the economy, for the market, for consumer sentiment. If DKS beats on both sides, right? They beat their expectations and they beat their earnings per share expectations and their revenue expectations. I just want to look at 2884, 3448. Over here we have 24 and 3 and 295. So the expectation from the last earnings on November 22nd, the expectations have increased, right? You see the estimate was 2.269 billion, estimate of 2.702 billion. And over here we have, this front one is not billion, that's a ratio, my bad. And then we have the estimate of 2.84 billion. So, 2.84884 earnings per share, which is higher than the previous estimate. And then we have a 3.448 billion revenue estimate, which is higher than the 2.702 billion estimate, right? So the estimates, the guidance was strong during this earnings report to give them the numbers that they were expecting for this one. Now the share price has risen accordingly, and I think that unless we get a monster beat, this might go sideways. I think a good, strong, like insane beat would be catalytic for this to move up strongly. I think just like barely beating might not be good for it in terms of the results of the earnings. It might be good maybe 2-3 weeks down the line, but right away, no. And obviously technically a loss should bring the price down. I've never listened to a DKS earnings report, so I don't know how those guys sound or gals sound on the call. So I don't know, like maybe like they might have really strong guidance regardless of how they report, right? So who knows? I don't care. What I care about is technically this looks very nice. It's above all the moving averages. We are still kind of an area of chop. I highlighted this line here because I wanted you to see the higher lows that's been forming since way back here, July of last year. Right, we have this low, and then we have this high, higher low, higher high, higher low, higher high, higher low, just uptrending, like clear uptrend. So I'm looking for a continuation, which basically would say that this eventually will work its way up to form a new high over here. Now, is this, let me just take a look. This is not all-time high, but we're very close to all-time high, right? We're very close to all-time high. Oh, my mouse is losing power. All right, so we're very, very close to all-time high. Let me charge this before I embarrass myself, guys. This one. Take this opportunity to have some water too. So you can see just about a year ago, or maybe a little bit over a year ago. What is this? September of 21. So over a year ago was when we formed highs, all-time highs. And then after forming this high, a nice deep pullback, and then so like a little deep pullback, but in the grand scheme of things, it's just a little mini retracement, right? Big move up, slight move down, and continuation. All right, that's what we're seeing here. So we're not too far off from the all-time high, but again, we need to break out above this. We need to continue this trend and break out above this high here before we can touch those highs. Now, some of these levels I drew out. When the hell did I draw these levels? These levels are from a long time ago. Yeah, these levels are from way over here, and this November of 2021, so over a year ago, and they're still intact, right? I mean, we got to break above this level at 132.61. Above that, we can kind of get into this range over here, between these three candlesticks here, and then from there we can kind of continue to move up. But again, I think that we're gonna let's concentrate on tomorrow, right? Let's concentrate on tomorrow, because I wouldn't advise to swing for earnings, but tomorrow, if we can get, and again, this is with a market being cooperative, right? And there's just so many lines on this that it doesn't even make sense to draw anything. But I would say above high of day, which I don't even know if this counts. I mean, yeah, I guess this counts. Above the 132.62 mark, and for more safety, above the 132.90. So above 133, let's just set alert at 133 and be calm, right? 133 will give us the potential to trade within this range here between 133 and 136. I would probably smash like the 134, 135 calls above this range. And then if for whatever reason it fails, I would probably, this is another decent setup. You could probably smash puts into the 20-day, and then underneath the 20-day into this this level of support here at 128-ish. So You have 134 to the upside. Underneath 130, you have 128, right? So not too bad. I mean, $2 up, $2 down, $2 range in price. So not too bad. I like it to the upside. Again, I don't see. I'm forcing myself to look at downside plays on this, and I kind of see one here, but I mean, the 20-day is sitting right there. So who knows what's gonna happen? Do I have any more? I think that's it, guys. Hold on, let me see. I think that's it. Oh, last one, XLE. XLE daily. XLE daily. Big massive move up pretty much all year in 2022. It fell hard in the middle of the summertime, came back to the 200-day, bounced off of it, came back underneath the 200-day. Buyers liked it, brought it right back up. We had the 90s, the 90 calls, or 92 calls or something, which we caught. We caught, I forgot when it was, but good times either way. And now we're sitting. So now, looking at this, like I was looking at when I first put this on my screen, I was looking at this, right? This is what I saw. This is what I saw, right? I saw my kind of a channel down, 200-day acting as support, above, tested the 50-day, tested the 100-day, but we closed above the 20-day. I saw a big candlestick. I saw a range breaking to the upside on these 3 days. But if I zoom back a little bit, zoom out a little bit, I see that there's a potential double top here. Where is my, here it is. Right. I see this potential double top and I'm not in love with it. I'm not in love with it. You know, I'm not in love with it, but we'll see. Let's go to the 2 hour. I like it to break above these two moving averages and then test them as support. So flip from resistance to support on these two moving averages. And then I want to see it clear that falling resistance line. So I want to see it kind of, let me just draw it up. And again, this is me, speculating that this is what price is going to do. Now, if we get a bullish tech day, then we might not get a bullish energy day. All right. Or if we get a bullish tech week, then we might not get a bullish energy week. In which case, this double top might come to fruition and bring price back down to the 200, really depending on what tech does. But we had there were some days last week that we had like a nice pop, and last week was kind of choppy for energy, but there was some days where we had a nice pop in energy in the morning, and then like even though like tech was ripping, energy, everything was ripping, right? So for like the first like 10 minutes of the day, right? So I don't know. I'll be watching this. This is like another like if the market fails and doesn't necessarily cooperate with all of our bullish setups that we've discussed so far. Coinbase, Macy's, Nvidia, especially Nvidia, LRCX, JPM, X, CLF, especially Square, especially Apple. If for whatever reason the market says, maybe there's some bad news that comes out or something, or people are just too bullish and they realize and the bubble bursts a little bit, then and the market decides to, SPX or whatever decides to fall, then I think XLE is, and everything that's in XLE, so XOM, CVX, CVE, every other energy ticker that we play, those stand to benefit from a falling market. So I guess that would be, the hedge, right? Or kind of the bearish setup that we want, an inverse bearish setup. The market falls and you take XLE to the upside. Take it above, and let me just give you the setup real quick. Let's do the 2 hour. I would set my alert for the top of, I would set my alert for right at the 100-day, 87. I'll put it at 87.67, just above the 100-day. And then I would take my first play Oh, there's kind of a little head and shoulders going on over here. I would take my first play above what level is that? Above 88.76. If we look over here, 88.76, it rejected a little bit on this day, the 8th of February. It climbed up above it and stayed above it for a couple of days, and then it came back down and rejected it again, same level. There's a head and shoulders right here. Here's your shoulder, here's your head, here's your shoulder. So that means we have a daily double top, right? Also the weekly double top, same thing, right? Weekly and daily double top. And then we have a intraday head and shoulders. Shoulders. Shoulder one, left shoulder, head, right shoulder. Nice move down, right? Into a double bottom on the 200 day. So there's a lot of little technical factors here. If the market falls, this thing is gonna fly. It looks very nice to fly, especially on the daily with the momentum indicators. This is the type of MACD that I like. I like the MACD where the histogram flips and then we get the cross and the lines are below the zero line. They're not, it's not flipping while the lines are up here. The lines are down here, so now they have room to go up. The histogram has room to go up. Everything has room to go up, right? Our size pointing is pretty stable, 45 degrees, pointing up, 5204. We have room till 70. And TTM is losing bearish momentum. TTM is pretty slow on the daily. TTM is very nice on like 15 minute, 5 minute, sometimes even 30 minute, depending on what you're trading. But it's good that they're all in sync, right? And then you see that XLE just found a bunch of support at this level here, where the 200 day currently is at now, right? But this level here, which is, I call it like 82.75-ish. Lots of bounces at this level. 1, 2, 3, 4, 5 bounces at this level. So if we do get a short setup, you can go short into back to this level, 82.80, I would call it. But that is all I have for now, guys. I've been trying to be a little bit better about my sleep and respecting my own boundaries. So I'm gonna have to call it here. Let's just look at this last one. Costco had a beat on both sides, I believe. No, they missed on their revenue per share. Their revenue, not their earnings per share, was good. They missed on their revenue by 300 million. Somebody joked about them raising the price of hot dogs. I think it was DYT actually. So pretty funny. But nice hammer formed on Friday at this kind of what is this? This rising support level that I drew here. Nice hammer formed right on top of it. So I would target Thursday's candlestick, just like the open of it, the middle of it, and the close of it. I would just target those three levels. Let's just do it real quick. I mean, it doesn't. What's another minute? Let's get rid of. Yeah, it's fine. Get rid of some lines here. Get rid of some lines. I would target. The entry would be the open of it, or the bottom of this candlestick. Second target would be where all the consolidation is. Third target would be, coincidentally, where the 50-day is, right? So those are your three targets to the upside. If this is a bear flag and we fall down, then let's just keep it very simple. I'm going to measure these two candlesticks. These two candlesticks from top to bottom. I'm going to grab that candlestick. I'm going to set it to where price is at right now. And there's my measured move. Bring us back down to around 450 or so. It's actually 452, 452 almost even. So nice play either way, upside or downside. Let's see. And Costco likes to move, so if you see it moving it, go ahead and take it. There's your lines, there's your levels for Costco. All right, guys. Many thanks. Thank you for joining. I know it's late, and I appreciate each and every one of you being on this call and keeping me accountable. And I'll see you guys tomorrow morning. Have a good night, everyone.
Good night.
Peace.